What's up, everybody? Welcome back to my channel. Today, I'm doing something a little bit different. I am no longer wearing a mask. I have unmasked myself. I finally have gained enough confidence to show my face on the net. So I'm a little bit nervous, but please don't go too hard on me, okay? So, anyway, back to the video. Today, I am going to cover about central bank, okay, and how their theory about interest rate, bank interest rate affects inflation is actually wrong. Okay, something else affects inflation, and it's not interest rate. And I'm going to be referencing a lot of Dr. Richard Werner's work. And without further ado, let's start the video. Oh, I always forgot. Before I start the video, if you like this type of content, subscribe to my channel. If you like this video, please press the like button and also leave some comment. I do a lot of coverage on global economics and politics, as well as conspiracy theories. In the future, I'm thinking about covering about cultures as well, okay? So, without further ado, let's get started. So for this video, I am going to be referencing a lot on Argentina and Turkey because currently Argentina and Turkey has out of control inflation rate. Okay, so let's get started with Argentina. We can see from here the inflation rate of consumer price balloon after the COVID-19. Okay, you can see it's crazy. The number is crazy. Okay, in 2020, the inflation rate is 42%. 2021 is 48.4. 2022 72.4. 2023 133.5, and 2024 219.9. I mean, like, we have people from other countries that is complaining about inflation rate increasing by like 7 to 8%, let alone 200% in Argentina. So you can imagine how severe the economy has been in Argentina, and is also, while not as bad as Argentina, Turkey is also experienced disastrous inflation rate. Okay, back in 2020, their inflation rate was 12.3% annual inflation rate, and then it went up to 19.6 in 2021, and then in 2022 it went up even further to 72.3. It goes down a little bit to 53.9 in 2023, and then in 2024 it went up again to 58.5%. Okay, so I'm just gonna share you first of all, the official narrative that central banks all over the world have been saying for like forever is that interest rate would higher interest rate would slow down inflation. Okay, so you can imagine that probably this high interest rate is due to, one second, yeah, what is going on? So you can imagine this high interest rate we have seen in Argentina is probably due to, I mean, like, if we using that argument, common sense would say that probably the Argentina central bank has been lowering interest rate significantly for quite a while, right? Well, that's wrong. Okay, let us see what is the interest rate for Argentina. This is bank interest rate, okay, for loans. Okay, so as you can see, ever since 2020, Argentina interest rate went from 38%, and then by Q4 2021, by Q1 2022, it went to 44.5, Q2 52%, Q3 75. At its peak, it reached 133%. Okay, but as we can see, From here, oh my goodness, 1 second. But as we can see from here, even after the Argentine central bank increased interest rate exponentially for years, inflation refused to go down. So, where is the logic that higher interest rate can help slow down inflation? And the idea that you have to increase interest rate until 133% is ridiculous to begin with. I mean, like, you have some countries, they are already complaining about interest rate at 7%, 6, 7%, They are already saying that it is too high. But here you have 133% interest rate. It's crazy, okay? So I double check with Grok, okay? I asked Grok, when it reach 100%, does it means monthly installment doubles per year? And Grok says no. When the annual interest rate hits 100%, your monthly installment does not double every year. It actually gets much worse than doubling. Here's the brutal math for Argentina. 100% annual loan doubles in just 8 months. At its peak, Argentina has 133% interest rate. Loan doubles in just 6.5 months. I mean, like, I don't know how people in Argentina could afford to live. This is crazy. And then let's move to Turkey, okay? As we are seeing here, the the inflation rate went significantly from 2020 to 2022. It went down a little bit down and then up again in 2024. Now, what about the Turkish interest rate? One second, yeah. 2020 until 2022 went up. Let's see. 2020 and from August 2020, it went from 9% to 15%. 6% increase is already very high, okay? It stayed around 15% until September, went down a bit to 9.75, and then interest rate increased again exponentially until it reached 40%, 50% actually. But as you can see here, even the harsh increase in interest rate did not slow down inflation rate in Turkey. So as you can see, the central bank argument that interest rate can help reduce inflation is actually nonsense, right? I mean, like, just common sense. Come to think of it, if bank lending rates, interest rate increase, it means that uh, business loan will also increase, right? If business loan increase, then their profit margin will be squeezed further. If their profit margin will be squeezed further, then they will increase their prices, right? I mean, like, that's just my common sense thinking. I'm not some, like, genius person, but that's just my common sense. If somebody else can counter my argument with facts, I'm open to it, okay? But my common sense is thinking that if businesses has to pay more for their loan monthly installment payment, then their profit margin will be squeezed. And when the profit margin will be squeezed, they will increase prices, which makes inflation even worse. And then when inflation became worse, consumer will end up borrowing more from financial institution, which makes the thing even worse.
It's like a never-ending cycle, never-ending trap, which probably explain why Turkey and Argentina has not been able to get themselves out of inflation for the past at least 10 years or so. Okay, so yeah, so if interest rate doesn't have any effects on inflation, then what does? Well, according to Dr. Richard Werner, of course he was saying that interest rate has no effects on inflation. What actually has effects on inflation is actually the quantity of credit creation, specifically when it comes to household credit growth. Okay, and I think that makes more sense because the more loan you give, or actually the more new money that you created, and then uh, pass it on to consumer, the quicker inflation will pick up, right? I mean, like that makes more sense. So, is there any statistical evidence to prove this theory? Well, of course, we do have it. Okay, let us see Argentina case first. As you can see here, it went up and up. Interest rate also went up, but inflation doesn't slow down, right? Now, let's have a look at total credit to household and what we call non-profit, blah blah blah. But basically, this is a household credit growth. Okay. And as you can see, it's amazing how the graph move exactly the same as Argentina's inflation rate. So there you go. I mean, like it's amazing how exactly how it moved perfectly in line. You see, 2020 and 2022, the inflation rate increased, but not as severely as post 2022, right? So, what is wrong with this thing? Mm, 2020 until 2022. There you go. And then come 2023, they significantly increase credit household credit growth. And come 2023, inflation skyrocketed. So central bank all over the world, they have been lying. And now let us have a look at Turkey. Okay, so this is Turkey inflation rate. Let's have a look at Turkey inflation rate. And here also the pattern was similar. 2021, 2022, 2020, where is 2020? Okay, 2020 it went up and then it went down in 2021. 2020 it went up, when it went down mostly in 2022. And during 2022, the inflation rate did goes down, right? In 2022, interest rate did go down. And that, not interest rate, sorry, inflation rate did go down, okay? And then come Q3 2020, Q, Q, sorry, Q1 2023, they increase inflation again, okay? No. Q1 2023, they reduce inflation, okay? Reduce inflation. And then Q3 2023 and above, they increase uh, household credit goes grows again. And you can see from 2023 and 2024, inflation also grow again. So there you go. I feel like central bank has been lying all this while. Okay.
Now, it should also be noted that central bank decision, monetary decision, I mean, is independent from the government and independent from the people actually, because central banks monetary policies are independently made. Now I find that troubling because, you know, at least when it comes to politician, whether voting works or not, at least you got to decide who becomes the next prime minister. Whether it works or not, at least you have a choice, right? If let's say the policy from this prime minister or president is bad, come the next election, you can vote him off, okay? But when it comes to central bank, they are accountable to nobody. I mean, like, why should that be when they hold the most power over our economy? I mean, like, the government do have some power to some extent, but not nearly as much as the central banks. Why is that? I think it's about time that we put central banks accountable to Parliament and Congress. And uh, every time they want to make monetary policy decision, make them answerable in Parliament or Congress, right? And I also find it weird why journalists never ask question about uh, household credit growth. They still have this idea that interest rate affects inflation when it clearly doesn't, you know. So why is that? Maybe they are too brainwashed, you know. Maybe they are too brainwashed thinking actually interest rate do affect inflation, okay? And it also doesn't help that voices like Dr. Richard Werner are being silenced. I think the guy is very underrated. I think he deserves a Nobel Prize Award for economics. Anyway, another global central banking policies that I have hate for decades is that central banks all over the world, they are trying to eliminate small banks as much as possible. Okay, they want to reduce bank because they want to concentrate. They want only a few big banks in most country at least. Okay, they want only a few big banks in order to create a market monopoly. I mean, like, it's just common sense. I mean, like, big banks, they only lend to big companies, and small bank will only be able to lend to small companies. This is according to Dr. Richard Werner, by the way, and I feel like his explanation makes sense because, if you are a big bank and you have an asset worth of, like, I don't know, maybe 20, 30 billion US dollar, okay, would you rather lend to a company who wants a $100 million loan, one big company who is asking for $100 million loans, or would you rather lend it to 100 companies with total amounts of $100 million? Of course, you're gonna pick that big company, right? Because it just makes sense. It's much easier to handle one customer versus 100 customer, correct? Now, small companies, because they don't have as much large capital as the large banks, they have no choice but to lend into small companies. And also, big companies, they don't need a lot of workers. On a revenue per capita basis, they don't need as much worker as small companies does. So that also explains why graduates these days find it so hard to find a job. you know, because it has become increasingly more relevant throughout these past 10 years that if you are a graduate and you want to find employment, you have to rely more and more to big companies. And as I was saying, big companies doesn't need a lot of workers on a revenue per capita basis. What should be done is to create more small banks so that they can lend to small companies, and then these small companies could end up hiring all these graduates and so on. so that there will be less concentration. You know, employment is not only concentrated towards the big companies. So I don't know. I feel like what the central bankers of the world is trying to do right now is to create as much market monopoly as possible, to create large scale income inequality, large scale bankruptcy. I mean, like, just the example of Argentina and Turkey. I mean, like, how can people survive with 100% interest rate? You're just going to create a lot of bankruptcy. I mean, like, it just doesn't make sense to have 100% interest rate. Anyway, I'm going to play a clip from an interview of PBD, Patrick Pat David, and he was interviewing Richard Werner. Okay.
Part of me, the way I see it is, China became a behemoth because of us. And if you take us out, what Nixon did, first time a president visits China in 25 years after the terrible relations, he goes and he opens it up with the ping pong diplomacy deal, whatever that they had. For 25 years, no president had ever gone to China for 25 years. Relations weren't good. We didn't. So then he goes in. Then 01, the Clinton deal that gets done under Bush. You take us out, who's China? They needed us to become. It's almost like somebody giving credibility. Yeah, it's like all the other countries around the world. Who's willing to give China a reference? Call US. Yes, you can do business with them. All right, we're doing business with China. And you forget that?
Yeah. No, you're absolutely right. In fact, that's my earlier point. And it took a while.
Sorry, guys. Here is where I disagree with PBD. Okay. I mean, like, he is right. Okay. Like, China for decades, they put a high tariff on most imported good. And the most affected country in the world due to these unfair trade practices is, of course, the United States. Okay. But at the same time, there is no country on earth that has become from poor to rich by playing on an equal level field. Okay. When you are poor, you're gonna have to protect your industry to a large extent. Okay. If you freely open up your market to developed countries, then you're not gonna have any industry at all. You're gonna have to be an importer because poor countries cannot compete with rich countries with all the advanced technology and so on. So in the beginning, China does have to protect its economy. Okay. I mean, like, the same thing was done with Japan. Okay. Japan for a long time was very protectionist. They charge high tariff for imported goods, okay, while taking advantage of the Western market. The same thing can be said for America as well. You know, for hundreds of years, the US take advantage of the European markets. The European markets charge very low tariff rate, while American market charge very high tariff rates. Okay, so is it unfair? Yes, it is unfair. But at the same time, I mean, like, is it unfair that one country charge high tariff while the other charge low tariff? Yes, it is unfair. But at the same time, you got to put it into perspective that it's also not fair for you to expect a poor country to be able to compete with a rich country competitively at an equal footing level. So anyway, let's continue.
See, so if the US policy had changed a bit earlier, it could be a totally different story. But it's happening now when China has, and partly thanks to this, policy, it was President Nixon and Henry Kissinger and the strategy they had with China. They did a lot to put that in motion. And then China, you see, of course, why was China then so successful? Because it's one thing to get the right environment and get the US market, but you also have to deliver. And they managed to deliver because Deng Xiaoping came to power in 1978. That's really when it took off. He was very pragmatic, and then Trump would have liked him because he was a pragmatist and not ideological. he said, well, let's forget about this ideology. Obviously, he's talking about the communist ideology. He couldn't say it directly, but really, that's what he was saying. Let's do what works, what delivers, and let's actually find out what sort of policies deliver. Now, he looked across the China Sea and saw Japan doing extremely well. 20 years of double-digit economic growth, 15% growth. That means every 4.5 years you double national income, and then you double it again the next 4.5 years. And that's what Japan did. That's how you move from being a less developed country, a developing country, to developed country status in a generation. They did it. And he said, well, I want to do the same. He went to Japan in the first year when he took power, 78, when he rose to power. And he asked the Japanese fairly openly, although he was sure to meet for dinner, drink the sake and the motai, it works, magic. And the Japanese, he told them, tell me the secret of your 15% growth for 2 decades. Tell me the secret. I want to do the same. And you know what? If you do this in Japan, if you ask sincerely, off the record, at a dinner with a bit of sake, they will tell you the truth. And the truth was, they asked him, so how many banks do you have? And he was talking about banks. We have one. It's a Soviet system, one bank. I mean, the Soviet Union, they call it Gosbank, the monobank system, central planning. And the Japanese must have laughed. One bank. China is so big at the time, I don't know, 600 million people perhaps at that time. You need 5,000 banks at least. Because, why? Because growth means more transactions this year than last year. That means more money is used for transactions this year than last year. That's only possible if you've got more money creation. But if you've got one institution to create all the money, the central bank, is not going to work because that's central planning, and central planning actually doesn't work. So you need decentralized money creation. And that means, because who creates money is actually the banks. So you want 5,000 banks. Instead of 5 people at the central bank deciding how much money to create and who to give it to, why don't you have 5,000 banks in 35 branches with 30 loan officers each receiving, small local banks receiving the loan applications from small and medium-sized enterprises? Then you have 5 million loan officers doing the job instead of 5 people at the central bank.
Get out of here. This is a
That's what they did.
story?
That's the truth. That's the secret. Actually, I published it in 2 academic journals recently. That's the secret of the Chinese success.
Well, the secret goes to his diplomacy. Good for him.
Yeah.
So he went to Japan,
Yeah.
that they're whooping on him, and he asked them, what's the secret?
And they,
So as I was saying, I feel like small banks is necessary in order to create a stable economic growth. Now, what has the U.S. government policies, or better to say, Federal Reserve policies towards the banking industry in the U.S.? Instead of creating more banks, they have actually shrink it. Okay. Now, I'm just going to read you here. It is said that the number of US banks has declined significantly over the past few decades due to consolidation and legislation falling from over 14,000 in the mid 1980s to 4,487 FDIC issued institution as of December 31, 2024. So basically, they have eliminated, and of course, when they shrink this the number of banks, of course the small banks are going to be affected the most. They are the first to go. Okay, so what it has created is a market monopoly among big banks. And I mean, like, the US still has a lot of banks. 4,447 banks is still a lot. Okay, so actually the US is not that bad, but it's going worse and worse as time goes by. Okay, so anyway, I was let me know what I feel is what I feel is really happening right now is the elites want global consolidation of power. Okay, they want the one world government agenda to go through. Okay, basically they want to create as much uh disastrous economic events as possible, okay? They want a complete collapse of the global economy. I mean, like, they're moving through it right now. They want a one world currency. You can see the example of BRICS right now. Consolidation of currency, they are planning of creating a new currency. You can see the European Union, they're adopting the euro currency. Okay, the US is talking about invading Canada and Mexico and Panama. Okay, and my bet is at some point they're gonna have a shared currency as well if that were to ever happen. Let's hope not. Okay, and the moment you let go of your currency, you will let go of the sovereignty of your country as well. Because when you no longer have monetary control over your country's monetary policy, it's game over at that point, okay? They have seized the sovereignty of your country. So I think it's about time that people put more pressure on central banks than politicians. Politicians is there just to distract us, okay? Left and right, conservatism and liberalism, okay? It's all just a divisive tactic to make us look at this instead of looking at this, okay? It's a diversion. Politicians are all just puppets. The real power is the central banks, okay? They are accountable to nobody. So I think it's time that we start questioning the central bank. We should be more vocal about them, okay? Stop paying attention about these stupid woke policies and about, men competing in women's sport, men using women's bathroom. I mean, like, these are issues that has no impact on our life at all, okay? What impact our life is the economy. At the end of the day, is the economy stupid, right? It has always been about the economy, okay? And this is another thing that pisses me off when it comes to politicians, okay? I mean, like, they're wasting their time talking in Congress, talking in Parliament, talking brilliantly as if like they're so brilliant, talking about woke stuff, talking about racism and so on. But when they go back to the constitution, nothing happens. Okay, the road are still not paved. Okay, the bridge are no longer are about to fall, and nobody's repairing it. It's all talk but no actions. Okay, what really matters is the infrastructure, it's the economy, it's jobs. Okay, it's about making our streets safe. Okay, that's what you are paid to do. You're not supposed to talking to Congress create fear mongering mentality among the population. I mean, like, I've been hearing this in the Western country. They've been saying Sharia law, the threat of Sharia law. It's never gonna happen. Okay, stop create this fear mongering tactic in order for you to justify another war. Okay, maybe if you haven't started any war, there will be no tens of millions of Muslim migrants in Europe to begin with. Okay, and America has only 1% of Muslim population. There's no threat of Sharia law in America. Okay, so you're passing laws in Congress ban Sharia law as if you're doing something important. No, you're not. Okay, you're just playing politics. Just cut the crap. Okay. Anyway, this is a message to Richard Warner. I'm a big fan of yours, and I would love it if I could interview you. There is one question that I feel like nobody has ever answered. Okay, Nobody has ever questioned, because I have heard that you say the central bank has many tools in order to control quantity of credit creation. I would love to know more, and I would love it if you could answer it on my show, okay? So this is an invitation to you. I've already contacted you many, many times, but unfortunately, I haven't received any feedback yet. I mean, like, I get it, you're probably busy, but please make my dream come true and accept my invitation, okay? Anyway, if you like this type of content, kindly subscribe to my channel, and if you like this video, press the like button and leave some comment. So bye bye everybody, see you later.